Hey, what's up, guys? I'm Michael King, back again with another video. So, this video I'm going to be analyzing the GBPUSD, and as you can see, this is GBPUSD on the monthly time frame. So, from what you can see on GBPUSD, I try to make the chart a little bit smaller so we can have a wider view of what's happening on GBPUSD. So, on GBPUSD, we have, as you can see, a downtrend. This was like the low as at this period, that was around 2016, and price broke the low. So if you look at what is happening on the monthly time frame, because before I walk all the way down to the 1 hour time frame or the 4 hour time frame, I want to try and give you guys an in-depth understanding of what is happening on GBUSD overall. So if you look at what is happening using the ICC concept right here, after price break this low right here, we see price traded lower, and price tries to go all the way up to this point right here. So you could be wondering what pushed price all the way up to this level right here. Well, the reason for price going up to that level is because of we have this monthly fair value gap right here. So this monthly fair value gap right here was the reason for price trying to trade higher actually. So price rose up to this point right here to trade into this fair value gap, and as you can see, price is heading lower. So I expect price to trade all the way down to this point on the monthly time frame. That's what I expect GBPUSD to do. So it means we are to see like a continuous down pattern on the GBPUSD. But otherwise, if price wants to go a little bit higher, more than this point here right here, it might be because of price want to trade up into this fair value gap that we have here. So with that understanding, since we're anticipating for price to keep heading lower, I'm going to come all the way down to the weekly time frame. So now on the weekly time frame here, we had a fair value gap price here. We had a fair value gap right here. We extend this to currently at this level right here. So we had a fair value gap on GBPUSD around this level right here. So now if you observe carefully, you see that during this level for GBPUSD, when price traded into it, we had this bullish candle because this level rejected price, but we expected price to go a little bit higher. But one of the reasons why it was cut short, and I can see price is trading lower, was because of the fact that I'm going to zoom the chart a little bit actually. Was because of the fact that if we look carefully, we had another fair value gap right here. We had another fair value gap right here. So the fair value gap from this level right here pushed price up, but the upward movement was restricted by this fair value gap we had right here, which reversed that trend and pushed price down. So price fell lower, then price tried to trade a little bit higher to this point right here, then this level once again pushed price up. But the major reason why price traded a little bit higher than this was because of, from the daily time frame, we had a fair value gap. So what I'm going to do is I'm going to delete this one right here, and I'm going to leave this one because I might still end up trying to explain on this right here. So before I give a bias on what is going to happen on GBPUSD this week, I need to give you guys a foundation of what is actually making all these movements on GBPUSD. So from the daily time frame, this was when price traded into the fair value gap on the weekly time frame. Then price went lower and price was consolidating around there. And I'm going to explain why price was doing this right here. Now you might be wondering what actually made price of GBPUSD for the past, I think this was like last 2 weeks. What made price to behave like this during that last 2 weeks? I'm going to explain that to you guys actually. But before that, I want to delete this weekly fair value gap. So now price traded into the weekly fair value gap and price came down here. So if you look carefully on this 1, 2, 3, we actually have a fair value gap if you look at it carefully. And I'm going to draw the fair value gap right here. Now this was the fair value gap right here, and if you watch carefully, look at what price did. Price was trying to trade into this fair value gap so you can start heading lower, but the news that was released during this period were all news that had strength for USD. So because of this news was giving USD that momentum, GBP was actually like losing that strength and price was going down. So anytime they release the news, price will trade lower. Then once that momentum that have been caused by the news have been decreased, price will try to see if it can trade higher to this point. So that was happened the entire days during this period right here, until eventually during the next week, that was last week actually, price traded up to the fair value gap, and as you can see, we are having a rejection. But I traded this candle right here on the 50 minutes time frame, and I made more than 200 pips actually. So I will show the screenshot as evidence. I made more than 200 pips from this, and I'm going to explain how I trade it if you really want to have an idea of what made me to place that trade. So what I'm going to do right now, this daily fair value gap, I'm going to come all the way down to the 1 hour time frame, and I'm going to reduce the chart a little bit so you can see what exactly happened. So this was the fair value gap from the daily time frame. Price traded into it and price started going down. So you might start wondering, what exactly made price to leave the fair value gap and trade a little bit higher? Well, if you look at this right here, we have a fair value gap on the hourly time frame right at this point right here, and price tried to trade into it. But I also used another method to have an idea of what exactly made price get to this point and the exact point I should expect a reversal. What I actually did was I made the standard deviation that I learned from the RTT concept. That is, I'm going to insert Fibonacci retracement tool right here. So what I did was, this is the highest point right here, right? This is the highest point, and I'm going to connect this right here. This is as at this period. I'm talking about the period between year and let's say year, period between year and year. So I try and look at the current highest point right here. So this is like the highest point beside this one. You can either use this or you can use this. So I'm going to zoom the chart a little bit so you can see what exactly happened there. So this is what I'm going to do right now. I'm going to show you guys something. Now if you look at this very well, look at the candles that we have right here. This is the highest candle and it traded low actually, so it means the opening is above the close. So what I'm going to do is I'm going to connect this Fibonacci retracement to the highest point. It might be open or close, but in this case it is the open price, so you connect it to the highest, right? Now once you have connected that, you now look for the current low, because this is the current high within this period, this level, this line here, and this line here. So this is like the current high, right? So now you look for the current low. If you look carefully, you see that the current low should have been this, no? But this right here push price higher and price retrace before price started going up. So what I actually did was I connected the low to the current low. So I'm going to zoom this area right here so we can have an idea of how to properly place the Fibonacci tool. So now look carefully. I'm going to reduce it a little bit. Okay, we are looking at here. All right. So now look at this carefully. Let me bring the tool a little bit below so that we can see clearly. So if you look at all what we have here, this is the lowest point. This is the lowest candle here, and it was actually a open below the close, so it means the lowest point is the open price. So I'm going to connect this right here to the open price like this. So I'm going to zoom out now. So now looking at this carefully, we connected the high of the Fibonacci to this place right here, to the current high, and the low of the Fibonacci to the current low. But if we look carefully, you see that we have 0, 100, then 50 is like the equilibrium, right? But look carefully now. Look how happened. This is minus 50. This is minus 100. So we use these negative figures. We use them to know where price is likely to head to. Do you understand? We use them to have an idea of, okay, this is the likely place that price is going to head. And most times, based on the way I've backtested this GBPUSD, price usually try to move to the minus 100. Take note of that. Price usually tend to move to minus 100 level. So what I actually did was I draw a line right here. I draw a line right at that 100. So that minus 100 level is where I put this blue line right here. So now watch carefully. I'm going to delete the Fibonacci tool, and I'm also going to delete this, and I'm also going to delete this. Now look carefully. when price was trading up, I expected price to get to this point. I was really convinced that when price get to this point right here, I am going to sell GBPUSD. So even on my Twitter, I'm going to put the link to my Twitter account. I'm going to put that in the description, and I'm also going to show you a screenshot when I was trying to call out that you should sell at this point on my Twitter page. So I was giving this call out for everyone to sell because I was very 100% guaranteed that price is going to fall. So I made 200 pips from this actually, and I've already sent the screenshots on the screen. So I was convinced because of the fact that this is the minus 100 tool and this was also a favorite lookup. So that was those two confluence gave me this assurance that price is going to fall. Price is going to trade lower than this low right here, and as you can see, price they trade lower than it. So now, if you look carefully, I'm going to quickly switch to like maybe the 5 minutes time frame so that you can see how accurate this is actually. I'm going to take you guys to that place. So let me try and zoom it a little bit. Yes, better. Then let's zoom out. I'm going to zoom the. Now watch carefully. We are getting to that blue line actually. That's what I'm heading to. Perfect. What do you see? Price traded into the pierce the blue line, close below it. Then second candle close, pierce the blue line, close below it. What do you see? Fall. Did exactly at that blue line. So this is a strategy I also use to trade GBPUSD beside the fair value gap. I shall use standard deviation also. This is a strategy that I'm trying to offer everyone here for free. Of course, you have to backtest it and see how effective it is. But remember the idea or the foundation behind it, which is just for you to know the current high, current low, which is right here, high and low, connected it, and we have an idea where price is likely to head towards. So that being said, let me go ahead to give you guys a bias on GBPUSD, what I expect on GBPUSD this week. So now I'll go back once again to the daily time frame so we can look at this right here. So on the daily time frame, this is actually the current low. This is the current low right here. I'm going to quickly edit this just to give it a good going to quickly edit this 20373. So this is the current low, then this is the current high for GBPUSD actually. So then now one thing I'm going to do right now is I'm going to go back to the 1 hour time frame. But before I do that, I want you guys to look at this. Now look carefully. This was when price traded into the fair value gap, and this was around the place the blue line was, right? That pushed price lower. But now, if you look at this carefully, you see that I also had a lower fair value gap right here. I want you guys to look at this carefully. So we also had a lower fair value gap right here. So now, price traded with it. Price closed as at this period. Price closed with this bullish candle, and some people might feel like, wow, this is like a low right here. And price traded into a low and form a pin bar. Let me go ahead to buy, and price will start going up. Well, on my bias, I don't really expect price to go up now. I expect price to go down because price have already traded into this fair value gap. So price was just trying to go up so it can create this fair value gap, and price have filled it, and now price is heading lower. So now if price is going to keep heading lower based on my bias, I expect price to trade into this low of the daily time frame. So I'm going to switch to the 1 hour time frame so we can look at this very carefully. So now this is the fair value gap price traded into. Now price is trading lower. So what I expect GBPUSD to do for this week, or for the first 2 days, that is Monday and Tuesday, I expect GBPUSD to do something like this. I'm going to quickly draw fair value gap I can find right now on the 1 hour time frame. Okay, one, and we also have a second one right here. So it means we have 2 fair value gap right here. So now what I expect GBPUSD to do is it could either trade into this first one and start heading towards that daily low. And by the daily low, I'm talking about this, right? I'm talking about this level right here, this level. So it could either fill that first fair value gap and price will start heading towards that level, or if it has not had enough, then it could also leave this one and trade all the way high to this fair value gap right here, then start heading lower. But if it ignores these two levels, this daily fair value gap once again by standards is zone to push price lower. So that being said, on GBPUSD, before I round up to this video, actually, I'm just going to show you guys, in case you're thinking of buying, like what will I have to see for me to be convinced that okay, we are likely to start having a buy setup. Is until I see this high taken, until this high is taken, this high right here, until this high is taken, before I can be convinced that GBPUSD wants to start going higher. And if GBPUSD wants to start going higher, I will assume that because of, if you look at the monthly time frame, once this candle has closed right now, we are going to have a fair value gap. If you look carefully, see it, right? So if prices want to start going higher, I will believe that it's because of, you want to kind of create a kind of fair value gap that we are likely to trade all the way up into, then start heading lower. You understand? So a move above this level right here is what is going to convince me that okay, I'd like to start seeing an upward movement. Do you understand? But we have some levels that can stand as zones to reject price. We have some kind of fair value gap. We have one right here. This is a fair value gap right here. We have another one again right here. You can see we have another fair value gap right here, also here. So there could be zones that price can trade into, price start heading lower. But if price ignored this and went all the way high to this point, it means I should start expecting price to be heading higher to meet that monthly fair value gap. So that being said, that will be all for today's analysis on GBPUSD. If you do enjoy, please hit that like button, also share to your friend, hit that subscribe button, and I'll see you in the next video. Peace.